Most beginners think investing is just buy a stock and hope it goes up. That's a recipe for stress. Today, we'll simplify stocks versus ETFs. You've saved. You've budgeted. You've invested your first $100. Now comes the big question: where do you put it? Individual stocks? ETFs? The wrong choice here can mean unnecessary stress, missed gains, or costly mistakes. But the right choice? It sets you up for years of growth with less worry. Understanding the basics, let's break it down simply. Stocks equals partial ownership in a single company. You pick a company. You buy shares. You benefit if the company grows. You risk if it falters. ETFs, exchange-traded funds, equals baskets of stocks. One investment gives you exposure to multiple companies at once. It's diversification in a single trade. Think of it this way: buying a stock is like planting a single tree. If it thrives, amazing. If it dies, you lose. Buying an ETF is like planting a small orchard. Some trees may underperform, others overperform. Overall, the orchard grows steadily. Pros and cons: individual stocks. Pros: potential for huge gains, more control and excitement. Learn company fundamentals deeply. Cons: high risk if the company fails, requires more research and attention. Emotional roller coaster for beginners. Stocks feel thrilling, but thrill can cost you money if you're unprepared. Pros and cons. ETFs. Pros: diversification reduces risk, simpler to manage, steadier long-term growth. Cons: smaller potential gains compared to winning single stocks, less control over individual companies. ETFs are like the training wheels for investing. They protect you while you learn. They allow growth without sleepless nights. Many beginners jump straight into stocks because of hype. I heard Tesla is going to double. Amazon's going up next month. That's gambling, not investing. Investing with ETFs first gives you exposure to the market without betting the farm on one outcome. And psychologically, it keeps your emotions in check. Because money that doesn't make you panic grows better. Step 1: assess your risk tolerance. Ask yourself, do I sleep well if my portfolio drops 20%? Do I enjoy following company news daily? Am I okay losing some money for a chance at bigger gains? If the answer is no, ETFs are your friend. If the answer is yes, you can blend stocks with ETFs cautiously. Step 2: start small. Even if you love the thrill of stocks, don't go all in. Pick one stock or a small number of shares, combine with an ETF. Use your first $100 to $500 to learn the process. The goal isn't to get rich fast. It's to learn and build confidence in your system. Step 3: time beats timing. Beginners obsess over when to buy. News headlines scream. Markets fluctuate. People panic. But history shows, consistent investing over years beats trying to predict perfect timing. Investing is like growing bamboo. Nothing happens for months. Then suddenly, it shoots up several feet in weeks. Patience is your most powerful tool. So how do you decide? ETFs if you want safety, diversification, and less stress. Stocks if you want control, potential high reward, and you can handle volatility, or combine both. A balanced approach for growth and learning. The key is to start now. Even $100 in an ETF or a single stock is a step forward. Once you've chosen your vehicle, stock, ETF, or both, the next step is building a portfolio that grows with you. That's exactly what we cover in the next video: how to build a simple investment portfolio. We'll show you how to combine assets, balance risk, and create a strategy that works whether you invest $100, $500, or more. Because the phoenix doesn't just rise once, it keeps building, compounding, and growing. Your journey is just getting started, and the next video shows you how to structure your first real portfolio for long-term success.